Hi, fellow investors. This is Joe Gruender from InvestorsHelp.net. Would you like to see how Trader Joe does an analysis on a chart or a set of charts before making a purchase? Well, that's what we're going to do today. This is part 2 of a set of videos that I prepared showing you how to first find an individual stock, a stock symbol, which is discussed in video 1. And here in video 2, we're going to take one of the stocks that we found called ANIK Therapeutics and do a quick analysis. What I like to do, as you can see here, we're on the TOS platform. We're on a weekly chart. You can see on this chart, one of my favorite indicators is what we refer to as the rainbow moving averages. You can find it under moving averages and then select rainbow. Down below we have the TTM squeeze indicator. We're not going to go into any detail today on that. That will be covered by either myself or more probably by our new trader, as you know, my daughter, Cindy Bain, who is trader in training, and she has many other titles too. So here we go. Looking at a weekly chart, we see that price moved above our moving averages and then retraced. In fact, it went below the moving averages. We refer to this as the stock mean. The stock price is always trying to return to its mean. And in this case, one of the most popular moving average is the 50-period moving average. And on this chart, it's a simple moving average. So the blue line is the 50-period simple moving average. There are 9 averages within a rainbow indicator. The first one is at 10, so the green line is a 10-period simple moving average, and the slowest moving average is the 90-period simple moving average. So the blue is a key moving average. The next moving average we have here, which is the dotted or small dashed line, is our 100-period moving average. And finally, the ones with a longer dashed line is the 200-period moving averages. So as you can see, we have 9, 10, 11 moving averages on one chart. What I like to do is to see when price breaks out above the moving averages when it was below. As you can see, one of the techniques I have used successfully for many years is watch for when price causes these moving averages to come very close together. And you can either buy when price closes above. Now this is a weekly chart, so we would actually buy earlier than a weekly chart in this period right here. But also you'll notice price retraces back down. It wants to test where it broke out. So as you see, it broke out here and this roughly $12, $12.10. It came back to test that breakout point. Didn't come all the way back to the 10, but it did come back, as you can see, to our moving average, in particular the 50-period moving average. And then price went up for weeks. In fact, in this case, for months. Now what we're going to do, here we are today. It is once again moving above our grouping of moving averages. So we want to zero in and see what is the situation for today. So we go up here, click on weekly, or we could even move the chart, but I'm going to do it this way. We're going to now change this from a weekly to a daily chart. And here you can see, once again, price, as shown in the previous chart, was moving up, and then lo and behold, look what happened. There was an immediate spike up, and then down it came. Now you're probably asking yourself, what in the world happened here? And looking at the chart, we can tell you right away. Notice down here we have the earnings announcement. And at the earnings announcement, if we can get it to stay on the earnings announcement, which I'm having, there we are. The earnings was 60 cents on July the 30th. Now we don't know, looking at this, whether this was better than the earnings in the previous quarter. If it was not better than what was expected by the market, or more probably the earnings was less than the previous earnings and less than what was expected by the market. So we immediately had a sell-off. And if you were holding the stock anywhere around here prior to the earnings announcement, you would have gotten killed to the extent of from 47 down to roughly 39. So, 9 or 10 points in one day is a killer, which leads me to share with you one of the concepts that's very important, and it's also in the Investor's Business Daily methodology. You do not hold a stock through earnings. It's too dangerous. Sure, it'd be nice to have earnings announcement come out and be great and have the stock price shoot up here, but there's no guarantee. So what we typically do is we'll get out prior to earnings and not subject ourselves to the risk of a bad earnings announcement. So here, bad earnings, our earnings less than projected, and it was killed. It then tried to consolidate for a period of several days here. It looks like a couple weeks. Started to move up, and then it hit a bunch of resistance. You see, all of these moving averages become resistance once it is broken. To the left here, we can see that all of these moving averages, it's support. It supports the price, and from there it usually bounces off. We got killed here. Now the moving averages has changed from support to resistance. It takes a lot of energy in the price action to actually break through. It hit resistance, the moving averages, and went down again. And then on October the 17th, as you can see, it consolidated for 4 days and started to take off again. Now here's something interesting. Look what happened. Price has now broken through the moving averages. It came back to test. So the price is testing once again in the last few days the moving averages. And look what happened yesterday and now today. Let's see if we can make this a little larger for us. So zero in. So our price now is above all the moving averages in the rainbow. It is now above the longer period moving average. This is a 200, and it is pushing or trying to push through the 100 period moving average. So once price gets above all of this resistance, there's a good opportunity to move ahead, to move up. In other words, the health of the price action on this stock is trying to change from a down market to now pushing through to maybe price will go up from here. Let's zero in and see. In fact, we could even see if there's an opportunity today to buy this stock. Now on an hourly chart, as you can see, price has been above our moving average. It came back to support once again the 50 period moving average. It tried to move up again. It doesn't have as much energy in this second move. Came back, and here for a couple hours here and a couple hours the next day, it was actually below the moving average, the 50 period moving average. Now you can see a couple days ago it had a big pop-up. This pop-up was based on an announcement. If you check news, and I don't have it on this chart, there was an announcement made that they're coming up with a unique code for a new drug at ANIK Therapeutics. So I think this has gotten the attention of other investors. So they waited for the pullback and they're now moving into the stock. So looking at a 1 hour chart, as you can see, we're approaching a recent high here. We're breaking through these two recent highs. In fact, we could put a price line on there, but we're not going to take the time. And you see the two previous highs here are currently trying to be broken. And of course, we have this pop-up on news that has not yet been broken. So the stock, as far as its price action, has changed. This is a potential opportunity to get into the stock. Now, the TTM squeeze indicator tells us something slightly different, and like I say, I don't want to go into great detail in there, but we did have a green ball after these two red balls, which is in this time frame. It went through we're out of the squeeze and it has been moving up since that time. So I would wait probably for a few more hours yet to get into the stock. But anywhere around this area is looking good to me. Now, where do you put a support? You could use a percentage value like the IBD, Investors Business Daily folks. They use a 7 or 8% stop loss, which you take 7% of this is roughly what? $2.80. So you could have a stop somewhere down here, or you could use a wider stop. Another possibility, you could have a stop a few pennies below the low of today, which is roughly 70, maybe 71, 72 cents. That could be another potential stop. It's a little tighter stop. So there are opportunities in the stock here today. Now, as you recall, I'm not here to give you specific financial advice. You need to do your own due diligence if you decide to go into a purchase of the stock. There's no guarantees. Use your own discretion, use your own research. So what we learned today, we learned how to quickly analyze a stock going from the weekly to the hourly, to the daily, then to the hourly chart. And I just can't help myself. I like to look then at the 5-minute to really time entries. And look at that, see? It's looking good. But anyway, enough of that. I'll get carried away and this will go on for 20 minutes. There's so much information to share. And that gets to the point that there's a tremendous amount of information that you can learn just from looking at a price chart. I like putting various indicators on my price chart because it gives me a perspective. Where is price in relationship to the different indicators? So I would highly encourage you to become proficient in a set of indicators, whether you like to use the rainbow indicator, perhaps the TTM squeeze indicator. We're going to have more videos in the future. Both my daughter Cindy and I will be putting some up for your learning and education. So enjoy, learn, and we'll look forward to talking with you again in the future. This is Joe Gruender at investorshelp.net saying so long. You have a profitable day. Take care. Bye-bye.